Alrighty guys, welcome. Hope you guys are all having a fantastic day today. Welcome to another live stream. I want to start doing these Sunday stock talks where we talk about stocks that, have some potential for the week ahead, giving you guys some insights, some strategies, the approach that I've been using. So guys, I hope you guys all enjoyed this. If you guys are new to the channel, smash that like button, subscribe, and we talk about all things money, investing, trading. So guys, I hope you guys all enjoy it. And if you guys want to learn more about trading in the market, check out our school. It's called the Swing Trading Masterclass. We have private live streams, we have quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. This is honest strategies that I've been using over the past 7 years. So check it out down below, and you guys can use code SPRING25 to get 51% off. So click that link, sign up. I'll see you guys in there. We only have like 5 spots left for that code. So I'll see you guys in there, and let's get started here. So, all right, this past week here, we've just seen so much sell-off, right? Looking at this one here, this is a Magnificent 7 ETF. Now, the reason I love this one here, the Magnificent 7 represents pretty much the best companies, in my opinion, in the S&P 500. So it has Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla. Now, there was a study done based on these stocks. Now, if you would have taken these stocks out of the S&P 500, the S&P 500 would have had a flat year, if not down 1%, compared to the normal, 10% growth we've seen. Now, the reason I've been looking at this one is this is a leveraged ETF, so it definitely is a little more risky, but does carry a lot more potential. So definitely one that I'm keeping an eye on here. We've seen just this huge sell-off, right, from 53 all the way down to $25. So it's down 52%. Definitely carries some potential here. Looking at that hourly chart here, just that slow and steady, downward trend of which we've seen here. So now for like an investment standpoint, I'm definitely averaging down on this here. But for a trade standpoint, honestly, it would be looking for like a breakout of about, in this range right here, right? So above 33. Throw an alert there, but definitely one that I'm averaging down. So as the market sells off, we're definitely going to be picking up some shares of this. All right. So other stocks here that we are holding VU, which is the Vanguard S&P 500. Now, this one here, obviously some people love this, some people don't like it, but for me, the S&P 500 is just such a good investment when the market sells off like we've seen here. So it's gone from 561 all the way to lows at 464. So we've seen a sell-off of like 17%. So we are 3% from a recession. Now, that word does sound scary, right? When you hear recession, a lot of people often think of like the Great Depression, the 2008 crash, or just other types of, points in time where we've seen, mass layoffs, we've seen just uncertainty. And that's kind of why we're getting sell-off in the first place, is because of the uncertainty here. But as we zoom out, you guys can see this little dip down really isn't that bad, right? We can remove that. It's normal, right? We saw one here in 2022, which, like I said, is normal, right? That right there is a recession. By definition, this is a recession. So what's the best approach to invest during this time? It's continue to invest. That's the best strategy. And you guys can see, followed by another great year of positive, great couple years, really, of great positive growth. So why are we getting so much sell-off here, and why is the market freaking out more? Well, we're getting sell-off because of the tariffs. Now, tariffs put pressure on other countries. It puts pressure on us. And honestly, here, the best approach is just continue to invest. Continue to invest. I think the biggest thing that we've seen is just how fast the market sold off, which honestly, there's pros and cons to that. Because often what goes up can, come down. What goes down can go right back up. So you just got to have that long-term perspective on this 5% sell-off we've seen is just a massive opportunity. So this is another reason why I am picking up some shares of the S&P right here. Is this right here is the S&P 500 when it's down 25%. Since 1950. So during the, decline year, rough time, average sell off is 37%, but the average return after 1 year is 21%. So if we invest during these times, right, this historically represents a great opportunity to buy it. So I definitely think here this is the main reason here why we're getting in on this is because of that history, and we know what it can do here. Um, but yeah, some other things here is this. So the Dow futures, which does start after hours here, is starting to get some sell off. I'm sure if you guys checked some of your portfolios, um, it's a little rough. So right here, the Dow futures are down about 1,200 points, or about 3.3%. The S&P 500 futures fell 3.7%. The Nasdaq is 4.6%. We've seen Asian markets tank. We've seen Japan's market fell 8% at the open. So it's rough, right? The price of US oil fell more than 3%, sinking below $60 a barrel since the first time since April 2021. Oil prices have been in a free fall as investors fear tariffs could plunge the global economy into a recession. So, yes, so that's what's going on there now. If we do get sell off, guess what, everybody? Guess what? Nothing about the investment changes, honestly. If anything, right, if we get another 3-4% sell off, that would put us in a recession. So that would put us right about here. We'll just say 4%, about here. Okay. So that would put the price at about 446. So this is like investing, back in early or late 2023. So this is just a huge opportunity if that sell-off opens up tomorrow. So now here, what are some good companies? For me, during these times, of sell-off, I go basic. I go ETFs like VOO. We'll go QQQ, which is just the NASDAQ version, really, of the S&P. We'll also go Visa, Meta, Google, and Amazon. These are the ones we are holding as of right now. Like I said, we are going to be getting in on that MAGX, which is the Magnificent Seven leveraged ETF, probably by the open, around the open tomorrow. So this is kind of the approach for that. Getting in here, start that averaging in process, whether it sells off a little bit, not a big deal. You got to have that perspective, right? The best medicine for a time like this is to go outside and take a walk, because your portfolios can be down, but you just got to have that mindset here. So opportunity wise, obviously there's always an abundance of opportunity during recession. So for me, we'll rattle through them really, really, really quick. Tesla, I think the huge sell off from 480 down to, the 240 range does bring some opportunity. But one of the things you have to understand is when Tesla's trading up here, at 480 in this range, in this block right here, that's not what Tesla should be trading for. I'll be completely honest with you. Nothing changed fundamentally about this company for it to be trading up here. The reason why is because of the Elon and President Trump. And I think that we've seen just nonstop buying pressure from November. Sell off. Now this is starting to look good back in that zone of buying. So hourly here, we've just seen that general downward trend here. So we'll see what happens, but definitely want to leave on watch. We got Root, ROOT here, which is on that good trend line. We have that alert set above 119. We got RITM here, just huge sell off here. we'll actually just remove this here from the opportunities, and that's completely fine. Royal Caribbean. This one here is trading on that nice trend line, as you guys can see, as we remove all of this stuff here. You can see how hard that support is. So we could see a little move, going up, but definitely looking at some lower time frames to see if we can get some buying pressure to go in our favor here. And if you guys are watching, make sure you guys smash that like button. Smash that like button. It does mean the world to me. Check out our school, right? 51% off, code SPRING25. But yeah, for sure. All right, we got mags. You guys know that. You guys know that one here. For breakout perspective, for like a trade, this would be the zone up in here at about 30 to 31 in that range there. We got Robinhood. Robinhood, I do think we'll start seeing investors start flocking to the markets in the next couple of weeks, just because that sell off here. So we could see a little move going higher, but this one here is trading around that 200-day moving average line, so it does look pretty interesting. We got GDS here. This one's around that 200-day moving average line. EJR, another one here that is on that good upward trend, sold off below that trend line. So definitely want to leave on watch here for sure. DX, very similar, huge sell-off, such a short amount of time. You guys can see just that general downward trend here on that trend line here. So for like a breakout perspective, it does look a little rough, but it would be about 1250 in that range there. So we'll go ahead and adjust that alert there just like that. Being bada boom. And then the last one here, Berkshire Hathaway. Berkshire Hathaway here, we do have a good hourly support in this zone here. So don't be surprised if you guys see me pick up a couple of shares of this here tomorrow or this week sometime. You can see the heavy amount of support in that zone, sold off down to that point. Berkshire Hathaway is a very, very smart company, which I love. They hold a bunch of cash, which is great, like $300 billion, something absurd. So for me, yes, we are definitely probably going to be picking up some shares of that. But like always, the biggest thing about investing during this time is to understand the long-term perspective of some of this stuff. So, trading, like our in and out swing trades, are definitely kind of not on pause, but we're not going to be like seeking out these plays right now just because of the huge sell-off we've seen. We're definitely, when the market does turn around, whether it's in a month, whether it's in 2 months, we're definitely going to be looking for those plays, getting in on blue chip, well-established companies, ETFs. So guys, hope you guys all enjoyed this. If you have any questions, feel free to ask down below. But as of right now, there is so much opportunity. We'll go through it one last time because we have a lot of people here. So this right here is our holdings tab with the stocks we're holding. We got VU, Vanguard, S&P. We got Visa, QQQ, Meta, Google, and Amazon. And then in the morning here, we're probably going to be picking up some Berkshire Hathaway, huge hourly support in that zone. Also, MAGX here, the Magnificent 7 ETF, which has fantastic holdings. Like we got Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla all leveraged in this one. So it's a leveraged. So it's definitely going to be a little more volatile, a little more risky. So guys, I hope you guys all enjoyed this. Smash that like button. Check out our school. Don't forget, code SPRING25, 51% off. So sign up, learn to trade, learn to get in and out, learn how to find